Hi, I'm Jimmy. In this video, we're looking at Meta, ticker symbol META. So this video is the final video in our Magnificent Seven series, where we're analyzing all seven companies within the Magnificent Seven. So within this video, we're going to look at the basics of Meta's business. We're going to look at some recent updates. We're going to look at some key numbers, some of their financials, and then we're going to try to come up with the fair value for Meta stock using discounted free cash flow. Now, this analysis is going to be done on the Investors Grow website. And we can see right now that Meta is trading at about $555 per share. Now, I personally bought these shares a while back. I'll have all the numbers on the screen here. I bought these shares a while back. So the question is, do we buy more at this level? Do I sell my shares? Do I take profit? Or are we better off just waiting and holding? So that's what I'm looking at on a personal basis. But I'm going to try to get fairly thorough with where the company stands today to help you make a more informed decision for your investment portfolio. Okay, now to kick this off, let's jump in and click on the segments tab here. And just to make it a bit more readable, I'm going to zoom in specifically on the geographic segments as of their last completed fiscal year. And the main point I want to bring out here is, one, I was a bit surprised that between US and Canada, it only accounted for 39% of revenue, which was less than I expected. So this is a well-diversified company. In fact, it's estimated that between all their individual platforms, they have about 3.3 billion daily active users. Now, they have a ton of different platforms. This isn't the entire list by any means, but this is some of their main ones. They have Facebook, they have Instagram, they have WhatsApp, Facebook Messenger, they have MetaQuest, it used to be called Oculus. The list goes on and on. They are a massive social media company. In fact, they are the largest social media company in the world. Okay, now let's jump back over to the website and look at some of the financials. So we'll kick it off looking at revenue. Now, this is a chart of revenue going back the past decade. And we can see that in 2022, revenue declined by 1.1%. Besides that, revenue has done a fantastic job of increasing over the course of the past 10 years. Now, by no coincidence, 2022 is actually when I personally bought my shares of Meta's stock, mostly because as they began to stagnate a bit, the stock saw a massive pullback, along with a lot of other tech companies back at that time period. Well, that's when I jumped in when we saw a big pullback in the stock. The stock looked fairly significantly undervalued. And that's when I jumped in and bought my shares. Well, since then, the revenue for Meta stock has climbed to above $150 billion a year. Then when we jump in and look at the revenue growth rate, let's click right over here. Now we can look at the revenue growth rate and we can see that although, yes, revenue growth has gradually declined, and we're going to come back to this in a little bit because I think that this is an important concept. Basically, the concept is that smaller companies can grow faster. This is a $1.4 trillion company putting up $150+ billion a year in revenue. That's difficult to grow. So 16% a year is decent for a company this large, although earlier on, certainly when the company was small, it was a little easy to grow at a faster pace. Later, when we try to come up with a fair value for Meta stock, we're going to apply this very same concept, but we'll come back to that in a second. Okay, now before we jump on to our next chart, I just want to address this 2022 pullback real quick, because I think that this is an important thing to consider with Facebook, with Meta in general, as far as how they run their business. So I think the first question to answer here is, why did they have a pullback in 2022 and then they continued forward? Well, for one of the answers there, we can jump over to the economics part of the website and we can see that this is a chart of CPI, inflation, and 2022 right up here. This is 2022 when the US economy was struggling a little bit more. So I think that the economic uncertainty certainly added to some of the headwinds that Meta was facing. Now, along those same lines, another thing that happened is the euro depreciated relative to the dollar. Well, since Meta reports their financials in the US dollar, with the dollar appreciating and, let's say, revenue, although it could have in theory been the same in Europe, with a change in currency, it would look like their revenue, in fact, dropped a bit. So that certainly played a role in it. Plus, some other things to consider. At that time, TikTok was going pretty nuts. A lot of traffic was going over there. A lot of ad revenue was going over there as well. Again, putting a strain on their business. Then, at that same time in 2022, Apple had changed their privacy policy, and that ended up hurting a lot of companies' businesses. This is one of the big reasons at that time that Meta stock got smacked down when Apple made that announcement. Basically, it didn't allow them to target advertisers just quite as much as they used to be able to. Well, clearly, again, if we focus just on the growth of their revenue on a year-over-year basis, since then they've sort of figured that out. And I think that's one of the special gifts of Meta and the management team there. They've done a good job of adapting to changes in, let's say, the competitive landscape of their industry. They've run into products like, something like TikTok, which is a big thing, and they push out, Instagram Reels and stories, and they push their platform, and their platform does very, very well. They've done a good job of adapting to the different changes, and I think that is likely to be a long-term strength for Meta, at least as long as the current management team is in place. Okay, now let's jump in and look at net income. So when we click on net income, well, we get exactly what we might expect. 2022, the numbers pulled back a bit, and then they began to climb. Although in 2023, the numbers reached about where they were in 2021, which implies that net income margins hadn't fully recovered. Well, we could test that out. And when we click on net income margins, we can see again, 2022 net income margins were their lowest. They pulled back to about 20%. By the way, 20% are still fantastic net income margins. That was a bad year for them. But then they gradually began to ramp back up. In the most recent 12-month numbers, well, net income margins are above, they're mid 30%. They're about 34, 35%. Just to put that in perspective, Apple has net income margins in the mid 20% range. Microsoft, one of my favorite companies, has net income margins in the mid 30% range. So Meta is competing with some of the premier companies as far as profitability goes. Okay, now I always think it's important to look at something like shares outstanding. Is this company buying back shares? And we can see for a while the numbers were ramping up and then they gradually began to decline. Now, it might be tough to tell, so let's adjust these numbers ever so slightly so we can see it a bit more. And now, although it's a bit zoomed in, so it makes it look like a more dramatic fall, I just wanted us to get an idea of how much they've actually pulled back. Meta, again, because they're able to generate decent profit margins, well, they can use that profit and that free cash flow to buy back shares. Okay, now before we jump in and look at the fair value for Meta stock, let's jump in and look quickly at analyst estimates, specifically analyst estimates for free cash flow. So when we click on this chart, well, we can see that this is a chart this is free cash flow relative to analyst estimates. Analyst estimates are the ones, it's the red line. So, well, you can see basically all the numbers are green, which means that the company has outperformed from a free cash flow perspective every year going back the past 10 years. So free cash flow is shaken out better than analysts have estimated for each of the past 10 years. Now, this is a good sign when we're jumping in and looking at what the fair value, whether or not we think discounted free cash flow is a good number to use. The fact that analysts are, let's say, a bit conservative with these numbers is probably a good sign and a good indicator that discounted free cash flow could work fairly well. Okay, now when we jump over and look at our discounted free cash flow calculation, well, when we extend out 10 years, in fact, let me hide some of these assumptions so we can get a little bit better look at the numbers. But when we extend out 10 years, well, we can see that Meta's stock, although it looks overvalued, is just slightly overvalued. Now, out of these 10 years, the blue bars are computer estimates. The green bars are analyst estimates. And we can see that on a year-by-year basis, we actually have a lot of analysts that are projecting each number of, it's projecting the free cash flow. It takes the average number from all the analysts that are projecting the numbers for that particular year, averages them out. This is what we end up with. Now, to go back to what I had mentioned earlier about the gradual decline of revenue, well, we've done a very similar thing when it comes to free cash flow. So you can see that these numbers kind of ramp up. Well, when we look at free cash flow growth, what we did here is we took some recent numbers and we gradually decrease free cash flow growth. The idea is that free cash flow growth will gradually get towards our perpetual growth rate. In our case, we're using 2.5% as our perpetual growth rate. Oops, just kicked back. I used let's use 11%. Even at 11%, this stock looks pretty. I mean, it's a bit overvalued right now, but it's not nearly as far off as we might think. So I was actually thoroughly impressed with how reasonably valued it is, considering once again that this is a stock that over the past 1 year is up 63%. So this stock has run a ton, but it doesn't, I mean, it looks a bit overvalued, but not nearly as overvalued as some of the other stocks we've looked at. Now, me on a personal basis, I continue to hold my shares of Meta, and I intend on holding my shares for a long time. So far, they've done a good job of adapting with an industry that is difficult to adapt. They've utilized AI extraordinarily well. Basically, they've used AI to properly match. How can they best match, let's say, customers and what ads they should see? And on the advertising side, if you're an advertiser, well, they do a good job of matching those customers to the people who want your product. They've been amongst the best as far as utilizing AI to make their platforms more efficient. So in theory, if you're an advertiser, well, it makes more sense to advertise on one of the many Facebook platforms, because not only will you have a massive reach, but also your ads are more likely to be targeted to the correct customers. Now, that's not to say that everything is wonderful. There's a couple lawsuits out against Facebook saying that they, fudged their numbers a little bit, and we'll see how those numbers shake out, how those lawsuits shake out. But I have found on a personal basis that usually with these large companies, there's almost always a bunch of lawsuits out there somewhere, especially by people who make or lose money with these companies. So, with that being said, I intend on holding my Meta shares for an extended period of time. Let me know in the description below what you think of Meta. And if you want to sign up to get access to this website, I will leave a link in the description below. It's called investorsgrow.com. Link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.